Hi guys, I'm Rich. Let's go through my top 5 things to watch for the week ahead in markets. Number 1. March FOMC. The March FOMC meeting will be the headline event this week. The meeting is drawing a huge amount of attention in light of the volatile shifts in market expectations we've seen in recent weeks. Market pricing for the meeting had swung in favour of a larger 5% hike in reaction to the hawkish comments from Fed's Powell last week. However, the subsequent collapse of the SVB and the ensuing market turmoil saw these expectations paired. With CPI seen falling back in Feb, expectations are now split between a smaller 0.25% hike and unchanged decision. Number 2. UK CPI. The latest set of UK inflation figures this week will be in sharp focus ahead of the BOE meeting later in the week. With January inflation still highly elevated at 10.1%, the BOE was seen hiking rates by a further 0.5% to 14-year highs of 4%. However, forward guidance issued at the meeting and BOE commentary since then has pointed to the bank's desire to step away from further tightening. With this in mind, traders are looking for a smaller 0.25% hike from the bank this week, with the potential for unchanged decisions should inflation have fallen materially last month. Number 3. March BOE meeting. Following on from the inflation print, focus will then shift to the BOE meeting itself. Ahead of the inflation reading, consensus is built around a likely 0.25% hike from the bank, along with the chance that the BOE signals a pause beyond this meeting. However, this will be highly dependent on the February inflation data, so there is plenty of room for Great British Pound and UK asset market volatility this week with these two key events. Number 4. Canadian CPI. The latest set of Canadian inflation figures will be watched this week as traders look to gauge whether the BOC is likely to continue keeping rates on hold near term. With January inflation having fallen back, in contrast to the move higher we saw in the US, the BOC paused its tightening campaign and signalled a desire to keep rates on hold while inflation continues lower. With that in mind, should CPI reflect a further drop, Canadian dollar should remain pressured near term. Number 5. US, UK, EZ PMIs. Finally, at the end of the week, we have the latest round of PMI data sets for these three economies. These readings will be closely watched, providing the latest insight into the health of these economies. The bigger market impact is likely to be on risk sentiment, given the backdrop of fresh recession concerns amidst recent banking sector issues. Any upside in these data sets should help underpin sentiment somewhat as a result. You can, of course, click on the link in the description just below to see the full economic calendar with the previous month's data and consensus expectation for this time. But for now, thanks everyone, good luck trading this week, and remember to please give a quick smash of that like button and hit subscribe so you don't miss more content like this when it's released.